David Palmer. We were talking off camera a moment ago. I mean, the likes of Kava and Sweetgreen certainly had a good run as well this year, David. I don't know if your top picks incorporate more of that business model or what sort of drives it. Tell us.
You nailed it. Talking about the fast casual segment, you're certainly seeing those chains that are exposed to the upper to middle income consumer base, protein at a price, certain casual dining share gainers, company operated restaurants that are U.S. centric. Those all those circles really captured some of the winners in 24. So a Texas Roadhouse, Chipotle, those are some of the best performers. Brinker with Chili's being an outstanding performer. So the fast casual and the casual dining share gainers, particularly those that were giving you better food value, those were the ones that were killing it. To some degree, those still have some of the best outlook situations into 25. Texas Roadhouse and Chipotle are still average in terms of their valuation levels right now, so those would be fine. One that's below average and perhaps the only high-quality name within that zip code of being that U.S. company operated within that zone of casual dining that we're seeing is beginning to work is Darden Restaurants. That's a name that we think will continue to work perhaps more powerfully than the others because of the valuation set up there. Olive Garden is the key turnaround. They're going to be doing some stuff with digital and delivery, which should really help them as they go into their fiscal 26. So Darden Restaurants among that cohort, I think, is the name to look at.
Okay. And David, where do you stand with the in progress, I guess, turnaround of Starbucks under new leadership and how investors are now viewing the opportunity?
The Starbucks is a key name to watch. Obviously, they've been a mess of a company. They've had some issues with their core consumer on two fronts. First, they had their issue with the Gaza incident. And also their union has kind of created a black cloud over the brand. In addition to that, their previous core, which was that worker bee, everyday espresso user, has seen issues with their service levels. And basically, at those two fronts, they need to really cure the brand. Brian Niccol and team are working on it, and this is going to be the key name to watch in terms of a brand turnaround at 25. It's a U.S.-centric company-operated brand. It's exposed to the high-income consumer. If they turn around, that name is going to be a very powerful name. We believe in Brian and the team. They've made some steps in the right direction. There's been some signs of stabilization. They're not out of the woods yet. We'd like to see this union issue go away. We think they'll solve that. But the innovation pipeline, the operational cures, these are going to all be part of that. It's not going to be a straight line, but we recommend that one for 25 as well.